What is up, YouTube? I'm live on Instagram right now as well. So if y'all want to follow me on Instagram, go ahead, link in bio. Poor, but yeah, I'm Jimmy Dedications, an independent mind with courage and discipline. Let's spread the value of my channel through like, share, and subscribing. Drop a comment if you don't understand something. If you see value, hit the alert button as well. I post every Monday, Wednesday, and Friday at 9 a.m. This is my Instagram, Jimmy_dedication, so you can see me go live. This is my website, Lionett Core, to get my merch or to get my stock market book or course. Subscribe, hit the alert. Heat for this week. What we dropping for this week, man? What would I do in a market crash? Today is Monday. That's what we drop. How to write a business plan Wednesday. How to start a clothing brand Friday. So let's get into it, man. What is a market crash? Also, I be freestyling. I made PowerPoints, but I never write down what the fuck I'm gonna do throughout the video. So I really just be freestyling off the dome. What is a market crash? A stock market crash, sudden dramatic decline of stock price across a major cross section of a stock market. Can be due to economic or natural disasters, speculation, or investors' panic. The other day, somebody asked me what made the stock market crash. There go your reasons right there. Investors can prepare for stock market crashes by diversifying their portfolio, which diversifying your portfolio is investing in different sectors and different investment funds. So that way, if the stock market crash, real estate going up. Or if the technology sector crash, the fucking technology sector crash, the retail sector is going up. So basically you diversifying yourself into energy stocks, technology, retail, food stocks. You're basically just diversifying your different investments. So that way if one company crashed, the other companies could be holding it up. Like for Clorox, I had invested in Clorox as well because when COVID started, Clorox actually took off. You feel me? And all the other stocks went down. So diversifying your portfolio is like putting your money in different sectors, different investment strategies. So that way when one goes down, the other one's going up. And you can diversify your portfolio to certificate of deposits, bonds, or options. Now I don't do these two, but I do options. And if the market do crash or start to pull back, I will start swing trading like I do now. Swing trade calls, swing trade puts. So say you're investing in a company and it keeps falling down, you can get a put contract, and as it fall down, you will make money from that put contract, but you're not losing money because you didn't sell your shares, but as the share value go down, you're making money from the put options. So this is a list of the most famous crashes, and we'll go to which one? We'll go to 2000, year 2000, and we'll look at that crash together. You feel me? So yeah. So yeah, 29% .com bubble. So if you invested let's say $10,000, because we with big numbers, we big boy numbers now. Say you invested 29 for $10,000 at 1999, right? Then the 2000 .com bubble crash happened, right? That $1,000 would have went down to basically $700. You feel me? 30%. So that your $1,000 investment would have dropped down to $700. But what you gotta understand is, what would I do? I won't pull out of nothing because let's go look at charts real quick. I'm gonna take all these lines off because these lines are everywhere and they don't really mean shit. Okay, so let's go to the 2000 .com bubble. I want you to understand that no matter how far the market goes down, it will always recover. So here go the 2000 .com bubble. Oh, we gotta go to a higher time frame. I want y'all to understand no matter how far the market pull back, it will always recover. So the past over 50 years, ever since the stock market opened, it has always recovered from its crashes. So as long, see how it crashed here when the COVID happened? Boom, from right here to right there. It fell 35%. So no matter how far the market crash, it will always go back up to the original it will always go higher than where it crashed at. Right here, it was a small pullback. Let's see. So to answer your question, I won't sell. Pull back 20%. So your $1,000 would be, you know what I'm saying? Won't be that. It would be 800. Right here, it pulled back in '08. What was the '08 crash called? Financial crisis of 2007, 2008. So basically, what I'm saying is, in a crash, I won't even sell, bro. I won't sell. Now let's go to the all-time high up here. Damn, this finna be a big ass percentage drop. No way. That bit dropped 56% from the goddamn 52-week high in 2007. Damn, bro, that's half that's half of your money. But still, look, in the next from '07, it took years for that shit to get back up. But you feel me? Honestly, I won't sell because this the first tip you should do. I think I got this on here. I'm getting ahead of myself. We looked at them crashes. We're gonna go to the next one. Here we go. That's the same thing. That's just percentages. Stock market crash is more than 10% a day. It's different ways to look at it. A correction is a slow motion crash over days, possibly months, but 10% from market's previous high. A pullback dip is 5% through 9.9%. A bear market is when stocks trade 20% lower from the highest of previous year. Recession is the broad economy when there are two or more consecutive quarters of negative growth in the GDP. And I'm still learning as a trader, but I want y'all to understand studying Forex actually taught me a lot of these words. Because look, when I go look at the Forex news and shit, I'm all off topic like a motherfucker. Where see like this the news like let's see ISM service PMI. Like I don't know what the fuck that is, but trading Forex it just teach me to look up like what the fuck did this mean. The ISM report on business manufacturing are two of the most reliable economic indicators available, providing guidance to supply management professionals, economic analysis, and government. The reports are issued by ISM. See, like just studying this shit, non-form employment. Bro, I heard this shit so many times, but I be forgetting what the fuck that shit means. It's also known as non-form employment change. Is an economic indicator which measures jobs added in previous month. I knew that. I just be forgetting that shit a lot. But yeah, we getting off topic like a motherfucker. So a recession is the broad economy when there are two or more, you know what I'm saying? What would I do? First, I have cash on hand. So whenever I invest in a company, I never invest 100% of what I'm capable to invest in. So say I want to invest 10,000 in a company, right? Let me think what I fucking do. I don't even know. Cause it's like I never put like a whole 10,000. I ain't gonna say what I put in there, but I would never put a whole 100% of what I believe I should put in there because I know that shit going. First of all, the market is at its all-time high. Let's look at this. It's at its all-time high right here. When it was at its all-time high in what? When we looked at 2007, it took from 2007 all-time high to the 2012 just to get back up there. So I don't want to be the guy buying at 2021 high and then the market crash. Let me see. From 2021, the market crashed. Let's see, 25% to damn 20%. I don't want to be that guy waiting 4 more years just for the market to come back up here. You feel me? 2020. I don't want to be that guy waiting 5 years for the market to recover. So I always scale into it. So instead of putting 10 bands in something, put 5 bands into it. And as the price drop down, I ain't ever create a strategy behind this or plan. But as the price drop down, it's be like, okay, I'm gonna put 10% of what I put in. I'm gonna put 10% of my initial investment in again just because it's red today. Some days I be feeling that way. So it's like you come up with your own strategy, man. So if you put 5 bands in something and that shit red for the day, you can throw in another $500 on a red day if it's at a support level again. So honestly, with me, I invest in valuable companies like these shit's gonna pay me dividends regardless if the market crash or not. Like, boom, I'm gonna get paid 47 cents a share, regardless if the market up or down. They're gonna pay me 66 cents per share. They're gonna pay me 52 cents per share. They're gonna pay me 70 cents per share. You feel me? So it's like whether the market going up or down, I'm finna make money off dividends. You feel me? This is my Robinhood portfolio. That shit dope as hell though, for real, when you look at it. Like no matter what these companies are going to pay me dividends. Yo, what's up? I'm on YouTube with it real quick. Look, what y'all doing? So no matter what, no matter what, if they going up or going down, I ain't gonna sell out. I'm gonna just weather the storm since I got in at a good price. So say I bought eBay at $58, right? That shit gotta drop. Whoa, 25% just for it to be back to my level of where I brought it at, and it's still gonna pay me dividends, and I don't see it dropping that far. But yeah, let's go back to the PowerPoint. So yeah, I only invest in quality companies, diversify, and use options to balance out your losses. Well, it ain't even losses because you ain't selling, but to just balance out your portfolio if it do pull back. Never sell long-term plays. I missed out on more money opportunities selling long-term plays just for them to go back up. Like ETH. I had sold out of ETH. Dumb as hell. Dumb mistake. I should have added into it. But I had sold it out for like a 5% gain. I was like, man, fuck ETH. This shit keep going down. I'm up 5%. I'm selling now. But yeah. But yeah. This video 12 minutes long. Let me hurry up. Never sell long-term plays. That's what I do personally. That's my rule. The market always recover from crashes, so I wouldn't sell. You feel me? Go to chart, show your stocks. What would you do if you still be up on them? Make a PDF of these YouTube videos and let them be downloadable on websites. And yeah, so now this is just a picture of the market in the last 20 years. As you can tell, like the shit always go up. So if you invest in something long term, eventually it's gonna recover, right? It's just gonna take some time. See, look, this is the 2007 we was just looking at. From 2007, it took all the way to 2012 just for it to get back at that level. So that's why I'm weary of fully going into a whole company with all my money because the market at its all time high right now. And if it do pull back, I'm not trying to be the guy to wait 5 years just to get back to break even. But yeah, this is it for what would I do in the market crash and my PowerPoint on the stock market crash. I'm gonna see y'all Wednesday, and Wednesday we're gonna go over how to write a business plan. But yeah, peace. Make sure y'all comment, like, subscribe, and y'all do all of that good stuff.